let me present my guest for today is Sawan Karia, and he is director of brokerage channel in Huspy. And I cannot imagine anybody better to talk with about mortgage in UAE. I'm honestly very proud and thank you for taking my invite. Do you want to give a short intro all your history with the mortgage, because you have not only the local one, you have international experience too.
Indeed. Firstly, thank you for having me on, Yulia. It's a pleasure. So look, I've got a mortgage experience now spanning nearly 25 years, both in the UK as well as in the UAE. So, I've done financial services as a BA honors degree. And mortgages have always interested me from a very early age. So I started ground up. I've done pretty much most functions in a mortgage, right? So from underwriting to credit risk to assessment to approvals, etc. And then that made me realize that I actually, I was doing all the back end work, and the forefront, the sales guys were making all the money. So I set up my own mortgage brokerage in the UK. Very successful. And then I saw an opportunity here in the UAE where I saw, the country just mushrooming. So I saw a lot of buildings coming up, and I thought this could be a good opportunity for mortgages, and hence moved out here in 2010. Awesome. So I started off with mortgage sales here, and then ran a team, and then built a business, one of the largest here in the UAE, which got acquired by Huspy. So I'm now with Huspy for the last 3 years, 2.5 years. Yeah.
Great. I'm very impressed. And I want to say, even if I look in the industry, we're all online, we're all talking to each other, and you are the person that to go about the mortgage. And I'm very proud to talk about it. Why did you get passionate about it?
So look, I think the real estate class, right, as an industry is a really interesting one, right? Because as an asset class, real estate over the years, you see over the decades, it's only gone one way, which is up. Yeah. Of course, there is dips and highs, but ultimately it's a very safe asset class. And, mortgages from straight after university interested me because I took my first mortgage. I saw that there was a lot of issues, and I thought that I could be better as an advisor. And each mortgage case that comes has a different sort of challenge to it. So it's not monotonous. The role isn't certainly monotonous. Every case is different. You've got to kind of put your thinking hat on and find solutions. So this kind of kept me motivated within the industry.
I agree, yeah. And also I think there's an element, in my understanding, is a little bit of element of help. You don't have to have this big bunch of money to own a property. You can still own a property and not pay to anybody rent, and, kind of invest in your future. I like the concept, in a way. It's good for the beginners, for the young families and stuff. So it's a way to go. I can't afford a property, but I definitely can take a mortgage. So
indeed, it's totally fair to say that a property purchase is probably one of the biggest financial decisions one makes, right? Yes. So helping them towards the biggest financial decision, there is a level of satisfaction certainly.
Definitely. So coming from here, what is the benefit of becoming an independent broker, mortgage broker?
Well, it's a good question. I guess there are several benefits. I'll start off with, look, if we are specific to the Dubai market, right? The Dubai market is in its infancy, literally. We've been doing mortgages for less than 3 decades now. Other jurisdictions, for over a century. So it's a growing, dynamic, diverse market. There is a massive growth in population that I've personally experienced over the last 15 years in the UAE, and the number of real estate assets that are coming on also. So just to kind of give you maybe a few statistics, the mortgage market compared to the first 4 months in 2023, has grown by 55% in 2024. So you could see that
Whoa.
it's a huge increase. Also, the residential stock since January 2023 up to now, there has been 44,000 real estate assets that have been delivered by developers here, right? So there is a huge scope, and anyone entering into this market is entering at a very early stage of this market, right? So it's only going to go one way, which is upward. I think that's a good reason for becoming an independent mortgage broker. The other, I think, reason is, look, from an entry point, it's a very easy entry into becoming a mortgage broker, right? Because the setup costs are minimal, unlike other jurisdictions where you have a lot of costs associated with setting up a mortgage business. I think here, those costs are very, very minimal. I guess the third reason, you have 20 plus lending banks here, right? With more than 1,000 mortgage products. So there are many options to choose from, right? So this gives choice. Of course, the secured lending products are also increasing day by day. You have new products coming into the market. Now, for example, a lot of the banks are giving commercial agreements to mortgage brokers, right? We've got low doc mortgages. There are so many other sort of there is still a lot of scope to grow in this market. I'll give you another example. In the UK, we have secured lending, second charges. We have bridging finance. All of these type of finances are not available yet in the UAE, but they're evolving slowly. So I think there is a lot of products to sell out here. The fourth being, I guess, earning potential. I think that's got to be mentioned, right? Because a mortgage broker out in the UAE makes a fairly decent living. And unlike in most places, banks here, they pay mortgage brokers on slabs, right? So what that means, the bigger the volume of business that you do, the more the remuneration, right? So it's not like, unlike in the UK where you do a mortgage or you do 10, you get paid a flat 0.4%, right? Whilst in the UAE, if you do one mortgage or you do 10, those who do 10 will get a greater remuneration, right? So you can really take advantage of the slab remuneration that's available. And then I guess finally, there are many industries associated with mortgages, right? So cross-selling opportunities are vast, such as insurance, wills, currency exchange, etc., right? So I think overall, lots of benefits for becoming a mortgage broker.
And you also have Huspy to help you on work and on mortgages too, right?
So, yeah, like there are over the last sort of 5-6 years, there has been a few sort of aggregators or networks that have been born in the UAE, right? So these are effectively larger entities that aggregate business from smaller entities. Why would the smaller entities use the larger aggregated or network model? For a couple of good reasons. One, of course, the network has access to all the banks in the market. And when you're a new entrant in the market, to get agreements from the banks could be quite challenging. So you already have an avenue as on day one to work with the network and have an avenue for your mortgages with the banks. You also have the slabs that we spoke about. Of course, the aggregators achieve the higher remuneration, which means that they can pass on a greater remuneration back to the introducer. And finally, I guess we built some really smart tech products, right? Where brokers can log in and source products, very easily, create mortgage proposals, track their mortgages. So a lot of these larger entities have these sort of additional benefits for joining the network. So yeah, that is something that Huspy also does.
I definitely agree. I think eventually this tax solutions, they become something that we we can't live without. Like, now I don't really go to grocery. I order on InstaShop, or, I order an Uber. I don't stay on the street with my hand extended. So like, I guess the mortgage, like those brokers who used once the Huspy app or other competitors app, like they're used to this comfort. And like, why would you go to the old way and calling all the mortgage brokers and the banks and asking the rate, like, can you give me a discount? Because I'm here from 2013. I do remember that. Calling all the banks and asking for the better rate. We get a question.
Don't get me wrong. Things there are still some manual processes, unfortunately, but this is what we're here for, to solve.
Exactly.
And I guess, the government's gone paperless a few years ago, and there is a huge push for banks to also start getting digitized. So the banks are working on it. A couple of the banks have introduced some really smart, like pre-approval, quick pre-approval, instant pre-approval options. So I think it's moving certainly in the right direction.
Which one is your favorite bank right now?
Oh, good God! I think it would be unfair for me to specify names. I think what I can say is, the banks that offer the best value for customers, that's the best, right?
Give me top 3 at least.
No, look, I'll tell you how it works, Julia, because it's a little bit tricky, right? We've got 20 plus banks, right? And not all the banks have the best rate at one given point. So from time to time, the banks change, right? So their position changes. So today, there may be a bank that offers the most attractive mortgage for the customer. Next month, it would be a different bank. So the choice of bank really depends on the offer, right? In terms of customer services, I personally do like HSBC. I think they are an international brand, very transparent. So I have some of my mortgages with them. But to say that, there are many other banks that are also decent, but it varies from month to month.
Okay. When I'm going to take a mortgage, I'll call you and ask you which one do you like right now.
Yes.
Okay, we got a question here. So what are the things that we have to mind when we connect with an agent or a broker, that they give the files or leads, like, the broker we're dealing with, like what we need to look at?
Well, look, I think there are more established entities that have got the relevant processes to protect your client's data. I think that's important, right? Because, one of the last things that, any referral source wants is their client's data going elsewhere, right? So working with entities that have proper systems and processes to mitigate against any of this, data leaks or anything like that, I think that's important. Also looking at the type of employees the organization is hiring, right? Are they hiring experienced, qualified, individuals, or are they just randomly, picking people off the street?
Anybody who want to get the job.
So I think if you're qualified, you've got experience, then there is a better chance that you'd give sound advice.
Yeah, and ideally if they pass our training.
Indeed,
Yes.
Training and the accreditation.
Yes. We're gonna talk about it. Tell me please, is mortgage industry regulated in UAE?
So I would say it is regulated, but not fully regulated, right? So the central bank of the UAE governs the mortgage industry. Now, they have lots of rules around, loan-to-value restrictions. They have rules around affordability and things like that, serviceability, transparency, etc. But the regulation still has a lot of room, such as data protection, such as consumer protection, etc. The central bank has been working recently. Over the last 12 months, there's been 2 new regulations, Consumer Protection 1 and 2, that have been introduced. And I know that there are other regulations that are coming on for the industry. So yes, it is regulated, but I would say not fully regulated.
Okay, I understand. Fine. What is the loan value that the client can borrow? Like up to what level a client can borrow money in UAE?
Okay, perfect. So I would need to kind of break this down. So as per the central bank guidelines, for your first mortgage as an expat, you're able to borrow up to 80% loan to value for any property up to 5 million dirhams, right? So you put a 20% down, 80% mortgage. If your property value is above 5 million, then the loan to value is reduced by 10%. So you can only borrow 70 with a 30% deposit. If it's a second or a subsequent investment property, then you're restricted to 60% loan to value, right? So this focus is purely on expats. For UAE nationals, they get an additional 5% on all of those parameters. So first time buyers, instead of 80, they can borrow 85. For buyers buying above 5 million, Emiratis can borrow 75. So it's 5% more for Emiratis. I think I just want to add here that one of the other things that's available is most of the banks now do what you call a fee add option, right? So the transaction costs generally are, of course, your 4% Dubai Land Department registration cost, and a 2% real estate generally, right? So the banks would lend a proportion of those costs. So we can go up to effectively for expats up to 84.8%, 85 odd percent for expats. But that would still mean that the client would need a 20% deposit. It's just a proportion of the fees that can be financed as part of the mortgage.
And what is the average percentage on mortgage currently?
So look, 90% of our book actually do generally borrow at 80% or more, like with the fee add. So, I think it makes sense to leverage off the bank's money. So today, if you look at interest rates are sitting between 4 and 5%, right? Whilst return on investment can be anything between 6 and 10%, right? So
true, yeah.
You're better off leveraging off the bank's finance and then making some money on that rather than putting your own cash in. So it makes sense.
Yeah. Okay. Another question from the followers, let's call it. Can you please outline the educational path to becoming an accredited qualified mortgage broker? We just talked about it.
Yeah. Well, look, I think in a nutshell, of course, Think Prop is doing a phenomenal job in bringing some light into these educational programs and accreditation, etc. Right? So in the UAE, generally you'll have to take a test. Unfortunately, in Dubai, with Dubai Land Department, the tests were seized at COVID, and they haven't started again as a mandatory requirement. But I suspect that soon, taking a mortgage broker course through DLD will be mandatory. And once you get the course done and you get the qualification, then of course you can represent as a mortgage broker. In the interim, of course, the course that we've put together gives you all the knowledge that a mortgage broker requires to be able to operate, right? So with Think Prop, we have this 5-hour course where we go through 5 different modules, which will kind of go through, from start to end of a mortgage process, right? So you'll be a mortgage expert for sure at the end of that course.
So basically now you can join a company and learn from your boss, from your manager, whoever, how to do mortgage and work, because it's not, you don't have, basically is that.
Yes, it is. And look, of course, some of these networks have also got some smart tools to kind of give you information and updates on the market and changes, etc. But right now it's fairly traditional.
And that's why we decided to make a course to educate mortgage brokers. That this was the main reason, because there is a big gap. If in brokerage, like real estate brokerage, you have to take at least an exam, which consider that you have to learn. And they in DLD there is also a knowledge base where you download certain files, you can read them, or you can join our broker course, which we also have, and pass an exam. So there is a sort of certification accreditation. Currently in UAE, there is nothing about the mortgage education. So it's pretty much your own responsibility to learn the profession. How long does it take to get a mortgage approved in UAE?
Well, generally 45 to 60 days, I would say. Why the difference? Of course, employed applicants do tend to have an easier profile. So employed applicants generally, we get them done within 45 days. Self-employed applicants do take a little bit longer, up to 60 days. But I must say, highlight that, some of these banks are really trying hard to really reduce the turnaround times, right? So we had a campaign at Huspy, we still are running a campaign with one of the banks where for certain profile clients, we can do an end-to-end process within 15 days, right? So the tax are starting to reduce. The only caveat to that, I would say, is that the real estate market and the mortgage market has really taken off over the last couple of years here, right? So a lot of the banks are quite overwhelmed with the level of business that's coming in, and unfortunately, not all the banks plan their resourcing very well. So some of the banks that have the best mortgage products in the market get an overwhelming submission amount, and then they're not able to kind of manage the business and the process within the timeline. But we work closely with a lot of these banks and try and help with their processes and see how we can streamline them, etc. Some of the banks have already got like fast pre-approvals, like I mentioned earlier, and some other digital capabilities to kind of process cases a lot faster. Generally, you would say 45 to 60 days to be on the same side. Yeah.
Is it the right thing to do to first get a bank pre-approval and then start looking for apartments, or better find an apartment and then go through the process?
No, totally. First, we would always encourage for a client to take the pre-approval first for a couple of reasons. One, it puts the client in a much better negotiating position with the seller and the real estate agent, right? Mm-hmm. Because if you've got a pre-approval, you've already gone through the pain of getting that pre-approval. So that shows that you're somewhat a serious buyer, right? And the second thing is, this market is, like I said, it's a fast-paced, dynamic market, right? So when you get a good deal in the market, they don't hang around. There's, 50 buyers that are jumping for the same good deal, right? So, having a pre-approval, knowing that your finances are in order, you can push the button and move quite quickly on that decision. However, if there's a good deal, you put in an offer on a real estate, you sign, an agreement. And then if there is an issue with the mortgage, then that could really kind of put you in a tricky situation, because in the UAE, as you know, you have to put in a 10% security check, So always better to get approval first. Yeah.
Mm-hmm. Are the real estate broker, or like a mortgage broker, should be qualified to be able to qualify the buyers? Will they be able to get the pre-approval or not? Like, how do you advise on that? Because often like they try to give them advices on that, like you'll get the pre-approval, you'll not, this kind of stuff.
So look, majority of the real estate partners that we have, they would just refer their client onto us, a name and a number, and we would take the advice bit forward, right? Because all our advisors are qualified, so they're in the right place to kind of give the right advice. Having said that, a few years ago, DLD introduced an activity, a mortgage broker activity on real estate licenses. So there is a number of larger real estate agencies that have set up their in-house mortgage capability and hired professionals to give the right advice. So what I would say is, for any buyer, don't take advice of about a mortgage from a real estate agent. Leave the advice to mortgage brokers. Leave it to the experts. So the real estate agents, if you ask me about real estate assets, I'm not the right guy to kind of advise on that, but certainly I am for mortgages. So leave the advice to the experts in their relevant fields.
Fair enough. Yeah, I agree. There are two types of banking in UAE, and the same is respectively two types of mortgages. So there is a conventional and Islamic mortgage. What is the difference between them? and which one we should choose and why, let's say, for example?
It's a very good question. Look, there isn't much difference in terms of, actually there is no difference in terms of rates and process from a conventional to Islamic. In a conventional mortgage, you're putting a charge against a real estate asset where the title deed is owned by the individual. On an Islamic mortgage, structure is a little bit different in that under Islam, Muslims are prohibited to pay interest, right? So the way that the contracts are structured, the bank effectively buys the real estate asset on the client's behalf, and then instead of paying capital and interest like a conventional mortgage, you pay capital and rent. So you're effectively positioned as leasing the property from the bank, with the bank being the owner of the property. But rest in terms of your payments and your interest, etc., it's all the same. So under
there's no risks, right? Like there is no risks, like if the bank is owning the property and you're renting it, like it's all mentioned.
No risk whatsoever, because in case of a default, in any case, there will be foreclosure, right? Where there will be a repossession of the property after a period of non-payment. So no, there isn't any real fundamental differences. There is one difference in that for Islamic banks, because they own the property, they can foreclose or repossess and sell that property, while conventional banks have to go through a process of an auction to be able to sell that property. That's the only difference.
And also, I had once an experience to train a financial. There was an investment company in DFC, and they were Islamic investments. So from what I understood, there is also Islamic law on top of the central bank. So there is like certain investment or certain banks that they're dealing that fall under those laws. So like it's kind of safer. That's the way how they explain me.
Yeah, I think look, I think it would be unfair to kind of discriminate either way. So I think a lot of the options available, all the options available are equal and fair. It's just the process and the way that it's structured. And you're right. Yeah, there is an Islamic law that sits over and above that. So the Islamic banks would have to follow that.
A question that I often get asked, can a non-resident get a mortgage in UAE? And eventually get the residency after that because they'll own a property?
Yeah, so now, of course, with these golden visa rules, there is a lot more demand from non-residents, right? I was speaking to a few developers just last week, and I was surprised to see that a lot of their inventory was actually sold, a majority was sold to non-resident clients. Look, there are a lot of tax benefits out here. There's tax increments happening all over globally. So Dubai is a safe place to kind of park your money, certainly from an real estate investment perspective. So non-residents can buy. It's become a lot easier for non-residents to buy, and it's become a lot easier for non-residents to buy through a mortgage, right? So banks historically did not lend to non-residents, were very reluctant. They didn't know how to kind of calculate the tax implications in various jurisdictions, etc. So now a lot of the banks have introduced these low doc policy mortgages, where mortgages are extended with minimal documentation, right? So this certainly serves the non-resident market a lot better. Of course, the loan to value is a little bit reduced to 60%. Loan instead of the 80, which is standard. But again, it's a non-resident who's buying effectively an investment property out here, and hence it's 60. Yeah.
Oh, it's great.
Many more options now from a mortgage.
Okay, and the process is approximately the same, like a month and a half?
Yeah, very similar. Of course, the only change in process is the non-resident would have to visit the UAE to complete some of the paperwork and do the bank account opening and some of the formalities associated with the mortgage. But yeah, in terms of the process itself, it's very similar.
Okay. We have one more question. Sawan, sometimes clients ask us about bank name. then they directly approach the bank. So how do we tackle this problem?
Yeah, this is whoever's asked this question is a true salesperson, I guess, right? Look,
the same thing is with the developers and stuff. Yeah,
it's a real tricky one, right? Because on one hand, the customer, it could be a scenario where the customer wants to know the bank because they want to go with a reliable and trustworthy bank, right? And that's why they're asking. There are other times where they're asking because they've got the advice from you, and then they approach the bank directly to cut you out. Now, I think there are two things here, right? I think one, you can kind of, based on the client's profile, you can kind of determine, how the client is likely to act. But more importantly, most mortgage brokers in the UAE don't charge a fee, right? And of course, if there is no fee and you're an independent mortgage advisor with a suite of 1,000 mortgage products compared to a singular bank who's only going to offer you that one product. I used to use when I was doing sales a very good tactic. I used to tell the customer who the bank was, but I used to also reassure them that, look, we don't charge, right? So there's no difference going directly to the bank or coming through a broker. But with the broker, the benefit that you'll get is you get independent mortgage advice, meaning you're working for the client and you're selling any bank that fits the client's requirement, the best option for the client's requirement. Now, if let's say the client goes through you with the pre-approval and they're trying to identify a property, and they in between that process, a mortgage rate changes. As a independent mortgage advisor, you can advise your client to say, well, Mr. Client, I'd offered you a 4.5% rate, 3 weeks ago, but we've now got a rate that's at 4%, as an example, right?
Banks will not do that.
Banks cannot do that, right? Because they're not independent. So I think the big benefit is having that independent nature, and you've got to be able to communicate that very effectively to the client to say, Mr. Client, if there is a better rate, rest assured, I will come back to you and offer this better rate to you. You won't get that with the bank.
Is the same rate with the mortgage broker and with the bank? Like the bank cannot give you some lower rates or something? Is the same?
Actually, on the contrary, because the mortgage brokers do volume business, so there is always a wholesale retail element to this. So that volume business sometimes allows us to get exclusive mortgage products that are only available through the broker channel, which are cheaper than what you would get directly through the bank.
Okay, I can chip in here with an answer as a sales coach. We often have this question on with the developers, like how do I do? Like, he watches the property with me and then he goes directly to Imar. And buy directly from the Imar or from the Mark and so on. So I think in this business, it's all about the relationships, like you build the right relationship and rapport that the person trusts you, and you win that trust to the degree that he understands that you are transparent, that you will choose the best option, and you will not just sell him anything. As you said, the bank representative is going to sell the products only that they have, or even the products on what they have the biggest commission on. So they'll try to push the product they want. So it's all about the transparency, trust, and good relationship with the client. I always think like when you're in the market, when everybody is selling the same thing on the same price, on the same conditions, the only thing that makes a difference is you as a broker.
They're buying into you, not the product, right?
Exactly. So you have to be able to sell yourself as well as a trustworthy broker, mortgage broker in this case.
Great.
Yeah. As there been a huge off-plan activity recently, can clients get mortgage on property under construction, like on off-plan?
So under construction finance is restricted to 50% loan to value, right? But there is a caveat, and I'll just explain it. Sorry, because each one of these, it's not a straightforward answer. So as per the central bank guidelines, the banks can only lend the final 50% of the payment plan. So if somebody buys a property for $1 million dirhams, they would have to make $500,000 dirhams first as part of the payment plan before the bank takes over the balance 50%.
Okay.
Right? Now, what has happened historically, a lot of payment plans have been heavy on the back end. So for example, 30% during construction and 70% on handover. Now, in this instance, the under construction play that doesn't come into effect, right? Because ultimately you paid 30 and then 70 is payable when the property completes. So now there are a few sort of SPAs and payment plans that I've seen which are heavy on the front end. So effectively pay 70% during construction and 30% on handover. In this case, the client would have to make the first 50%. The bank can lend towards the 20% between 50 and 70, and then of course do the last payment finance as well. So it's not as straightforward. The payment plan has to support the under construction plans. I hope that answers.
Yeah, I understood. And a lot of developers, they do make payment plans that you can pay in slabs as well. Like you can
pay after post handover, right?
Yeah.
You're referring to,
Yeah. I want to ask a lot of people, the majority, when they choose a mortgage, they look for the interest rate. Is this the most important characteristic or aspect of a mortgage, what we need to look at, or there is something else that we need to pay attention?
So, the interest rates are certainly the most important aspect of a mortgage. However, there are other aspects that you must take into consideration, right? So the first is, of course, the interest rate. It could be a fixed variable. If it's a fixed rate, then you must look at the follow-on rate. So most of the banks will offer a 2, 3, or a 5-year fixed rate, right? After that, it goes to a variable rate. Now, a mortgage is a long-term commitment, right? So generally most take mortgages over 20 to 25 years. So it's important that you get a good rate throughout the mortgage period and not just for 2 or 5 years. So looking at the initial fixed rate, important, but also looking at your follow-on rate, super important. Then the third thing that you must look at is the costs associated within your mortgage, right? So every bank has a different charging structure when it comes to your mandatory insurances, property life insurance as an example, valuation fees, processing fees. So, no point having a low interest rate with really high costs, right? So you've got to be able to kind of take the costs into consideration when you're doing a cost analysis. And then, of course, the final bit is flexibility, right? So on the back end, if you wanted to sell your property, if you wanted to make overpayments on your mortgage and settle early, are there any penalties? What is the leeway there? So I think all 4 aspects make up the mortgage product, with the interest rates being the main one.
Okay. In taking the mortgage, your credit score is very important. Is it harder or impossible to take a mortgage if you have a bad credit score?
Well, it becomes a lot harder because, of course, the banks are lending to the individual. And if there is a history of negative credit, not making payments on time, missing payments, defaults, things like that, then, of course, you can understand that the bank would be a little bit reluctant in of course, extending a mortgage. If there is good reason behind why there is adverse credit, then some of the banks will take this into consideration. So I'll give you an example. I had a client who had a default on a credit card, and it was a default of 2 dirhams, right? So he had closed this credit card, or he had put in an instruction to close the credit card and made the final payment, but the final payment was 2 dirhams short. So his credit card remained open, and he wasn't making payment towards that credit card, and it was reflecting on the credit bureau as a missed payment, right? So a bit of logic, banks do apply logic to say, well, actually, this is not a real default, right? It may impact the credit score, but it's not a real default, right? So, if it's continuous missing payments on multiple liabilities, of course, that's an issue.
I had the same case, by the way. I was out of Dubai for a year in COVID, and I closed my credit card long before that on the phone because they ask you to close it on the phone. And then I wanted to take auto loan, and they told me I have a bad score. And I'm like, I wasn't even here. Like, how come? And I checked there, and I had an outstanding of 16 dirhams, which, and she didn't close the account, and it grew to like 4,000 or something. Like, it was insane. Yeah. So like the bank did cancel it, like they removed the outstanding, they closed the card, but the credit score didn't change. So only the bank that I was like, I'm getting my salary from, like the bank that I'm dealing with, only they agreed to give me the auto loan. Others didn't agree, like they saw the score and that's it. So in case of mortgages, they investigate the real issue, like what is going on. They don't just look at the score and halas.
Yeah, no, actually, look, some banks will look at the score and they have a minimum score that you must meet. But like I say, if you have a strong case, right? I had one that had a fraud on a credit card. So as in, they didn't even take up the credit card. Somebody else took up a credit card on their name. So we were able to prove that this credit card was not for the client. So yes, the banks, they don't really investigate it thoroughly, but if we are able to present it in the right way, in the right light, then they do take a view on it.
So the mortgage broker is helping you to get a mortgage, even if you have a bad history. Let's say that way. We try. Yeah. Good. I'll take this last question, and we'll ask if there's others, and then we'll finish. Okay, so another question. Sometimes the client is worried about the valuation, and every time we will say, don't worry about it, valuation will come exact on the property value, and suddenly the valuation report comes down, like lower. What do I say to this?
So look, it is a problem. To be quite frank, over the last sort of 3-4 years, I haven't seen that problem arise because we're in a rising market, right? Generally, those down valuations come when it's a declining market. Not to say that there aren't down valuation in a rising market. I think one thing to note is that the banks out here don't carry out the valuations themselves, right? They appoint third-party surveyors to go out to the property, right? And they use a number of factors to determine the value of the asset. The main one being sold comparable evidence, right? So I think it's important that if there has been sold comparable evidence, sold properties in that locality of similar type over the last 6 months, they take a view of that, right? Of what that value is. Also the condition and the positioning of the asset, the views, is it next to a lake, etc. That makes a difference in the value. Yeah, the construction quality as well. But I think, the most important factor is sold comparable evidence. If you're able to kind of even if there is a down valuation, some of the banks will allow you to challenge that down valuation with the surveyors and say, well, look, this is really not. And I've seen that. I've seen, a scenario where I'm valuing or put forward a valuation for a 4-bedroom property, and on the report it states a 3-bedroom property. So, there are sometimes human errors that do take place. But if you're able to kind of prove and justify why that property is worth more, then some of the banks will take a view on it and challenge that valuation with the third-party surveyor.
But like reading the question, I wanted to ask you, is it ethical or correct to encourage and promise the client that the report will come exactly around the value of the property? I don't think you should promise that.
No, actually, quite on the contrary.
Yeah.
On the contrary, you should be saying that, look, this is the value, the true value. This is the sale value. However, there are independent surveyors that would go out and value your property. If there is a down valuation, then effectively you're going to need to bridge the gap between the down valuation and the purchase price. So you, Mr. Client, must have sufficient funds available in case there's a down valuation. Or Alternatively, encourage a clause in the MOU or Form F that states that, should there be a down valuation and the client doesn't have the funds to bridge the gap, then, either it can be renegotiated or the contract will be null and void. Because otherwise you put the buyer in a real tricky situation where they don't have the funds to conclude the transaction.
Yeah, I agree. Do you think that the mortgage interest rates will grow in the next year or so?
Look, this is literally $1 million question. Look, it is expected
the last
that the
one gonna be $1 million question. I have the last question I often ask. Yeah.
So we are expecting that the market will start seeing a reverse rate cycle towards end of Q3. This is the anticipation when you look at a lot of the comments from the economists, right? The AED, the dirham, is pegged to the US dollar, right? So our rate will move in accordance to how the Fed moves in the US. So the anticipation is tail end of this year, the rates will start to drop slightly. So I think over the coming years, we should see a little bit of an ease with the interest rates.
And the last question from me, is it a real estate bubble in Dubai now or not?
Look, I don't think so, right? And this is my personal opinion. And I'll tell you why I don't think so, right? When I first arrived in the UAE, DLD was just formed and there was no escrow. Developers were building and not building and running away, etc. There was no credit bureau score. There was no real regulations put in place for banks on mortgage lending. There was no registration with DLD. It was paper-based.
For the property, remember this, like with banks.
Honestly, it was crazy where you would stand in a queue, and if you're in the front of the queue, you'd put in your deposit, and then you'd walk back to the back of the queue and sell that very piece of paper, right? So that created a huge sudden hype in real estate prices. This time around, I think the hype is on the back of, UAE is seen as a stable, strong economy, right? The way that we handled ourselves during the COVID period, I think that was phenomenal. And that's brought a lot of trust into the country. And therefore, now there is sustainable growth with all the risk mitigants that have been put in place, credit bureau, escrow, etc. So I think this time around, even if there is a cycle and there is a slowdown, it won't be a crash. And a bubble relates to a pop or a crash. So I don't think there may be ease of property values, but not a sudden crash like we saw in 2008, 2009 of 50, 60, 70% drops in values. I think those days are gone. This market has evolved and matured over the years.
I agree. So we have more questions. Do you have still energy to answer?
Sure. Yeah.
What about ABOR? It will come down in next 2-3 years. What is ABOR?
EBOR is the Emirates Interbank Offered Rate, right? So it's the rate at which banks lend to each other, right? So effectively, one bank may have a lot of deposits and not much lending. So they have a surplus of money. The other bank may have a lot of lending and not much deposits. So they have a deficit. So they borrow from each other, right? And there are 10 or 11 banks make up their interbank lending rates, and then central bank publishes an average, which is known as EBOR. It's 1 day, 1 month, 3 months, 6 months, and a year. So this is how the lending between the interbanks takes place. We answered this question a little bit earlier in that, our rates or our cost of funds is dependent on the Fed rate, right? Because the UAE dirham is pegged to the US Fed. So, if the US Fed comes down, then our interest rates will also come down. And the anticipation is that tail end of this year, we'll start to see a drop in the Fed and subsequently a drop in EBOR.
Yeah, so the answer is yes. Another question. Sawan, you reference a no fee to the client for mortgage broker service. Is the entire mortgage broker remuneration therefore delivered by the lender?
Yeah, so the lenders, so the lenders, as mentioned earlier, they pay remuneration on slabs, right? So the more business that you do, the greater the remuneration. Look, don't get me wrong, not to say that brokers are not charging fees, and they do a phenomenal job for their client by identifying the best mortgage and then servicing the entire mortgage. But in this competitive nature of what's going on and the hype that's taking place, we are seeing a lot of mortgage brokers that are coming away from fees, and yes, the remuneration that the banks give is very, very competitive. So yeah, this is how most mortgage brokers make their money.
I got it. What is the best way to increase your mortgage income? Sorry, as a broker, what is the best way to increase your income? Like, apart from the shops, that there is any other tricks?
There is. I think there are many ways, but I would say, look, firstly, if you are targeting, higher value tickets, right? The energy that you spend on a 1 million is the same energy you spend on a 5 million, right? It's as good as doing five 1 million mortgages, right? So, looking at areas, villas, etc., with higher values, higher loan sizes, this is a good way to maximize. Looking at your CAC, which is your customer acquisition costs, I found that the best way or the most successful leads do come from your existing clients when they give you a referral after a good job. The percentage of conversion is a lot higher than getting a digital lead, as an example. So, if you focus on being customer centric, and you do the right thing by the client and you provide them a good service, then it's highly likely that those clients will refer other clients, which cost nothing, right? So your cost of acquisition, it reduces or diminishes. Most mortgage brokers think about hunting. Where can I get the most? When can I get the next client? I strongly believe in farming. You have an existing book of clients. See what else you can do with these clients, and also see what else, if there are other introductions that those clients can give you on the back of a good job done.
Definitely. I also agree on this. Invest in your relationship today and then just gather the next years. I worked as a broker from 2013 to 2016, and up to now, people are asking me for properties.
I haven't. You did a good job. You see, they remember you after 8 years.
I haven't been in real. I'm in the training for last 5 years in training and consulting, and I still get people asking me for properties, and even for short term, because at that time we were doing short term as well. So it's true. Like, those who remember you and you provided them a good service, you'll stick with them. I want to say that it was really great, and we had a nice chat, and I see you guys have a lot of questions. And for that reason, we have a course with Sawan for 5 hours. I left the link right here, so you can go on the link and get the course. And there you can have all the answers and even more, right? And there will be also an opportunity in the end of the course to ask questions, because it will be live, so you'll be able to ask everything. So I want to say thank you. We spent almost an hour together, and it was nice. Like, I learned a lot myself. You almost sold me a mortgage. I'll just wait for the rates to go down in Q3 and come back to you on that.
I should have said that. That's brilliant. Thank you, Julia. It's been a real pleasure. Time flies when you have fun, and it's a real pleasure for everybody who joined. Thank you for joining. It's highly appreciated, and of course, the course is very informative. So those who would be interested, you'll get to learn a lot of cool things about mortgages.
Yes. Thank you very much. Have a nice evening.
Thank you. Have a good evening. Bye-bye now.
Bye-bye.